Hello, welcome to my short videos. This is the first of two videos that explain the difference between profit and riba as I understand them. In Islamic finance, trade is allowed, while interest, which is one kind of riba, is prohibited, as mentioned in this famous verse from the Holy Quran, Al-Baqarah 2, verse 275. In a typical business income statement, we normally understand profit as the residue from sales revenue after deducting all the costs and associated expenditures. In this example here, we have sales revenue 2 million, the cost of goods sold is 1.4 million, that gives you 1.6 million gross margin or gross profit. Take away the general and administrative expenses of 900,000, gives you an earnings before tax of 700,000. Less tax expense of 140,000 gives you the net income or net profit of 560,000. Maximizing profit is also assumed to be the objective of most businesses. In the statement of financial position, previously known as balance sheet, accumulated profit is shown as retained earnings right here. Clearly, profit comes from trade, which is encouraged in Islam. The basis of trade is different knowledge and skills that people possess, with which diverse goods and services are produced. However, people experience diminishing marginal utility with respect to the knowledge and skills they possess. For example, if I am a rice farmer and I am able to produce 1 ton of rice, only a small quantity I can consume for myself. Extra consumed would give me reduced utility and even can give me negative utility. Hence, it is beneficial for me if I can exchange the extra that I have for other things that I do not know how to make. So, I go to the market to exchange for them. Exchange is the process of gaining from other people's knowledge and skills. It is indeed creation of value where total utility enjoyed in the economy is increased merely through exchange. Through exchange, we are able to enjoy a lot of things we are not able to produce ourselves. Hence, exchange increases our standard of living. And this increase in standard of living is what profit actually measures. Profit, therefore, is the extra utility gained through exchange. Let us illustrate this. Let's say we have a farmer and a fisherman. The farmer produces rice while the fisherman catches fish. Let's say their utilities for consuming their own produce are as follows. For the first bowl of rice, the farmer gets 100 utils. The next gives him 50, the next 10, and the last one becomes negative utility. In other words, as more and more consumed, there is a diminishing marginal utility. We shall assume similar utility for the fisherman. For the first fish consumed, he gives 100 utils, the next 50, the next 10, and the next negative 20. Now, they can increase their total utility by exchanging among themselves. Let's say they exchange their third consumption. In other words, the farmer exchanges this bowl of rice for this fish. So the farmer gives the rice, and that's minus 10 for him, but that's 100 for the fisherman because he gets his first bowl of rice. And the fisherman gives this fish to the farmer, so that's minus 10 for him, but plus 100 for the farmer. So the net increase in utility for each one of them is 90 utils. So both of them gain from the exchange. And this increase in utility is what profit measures. But will an exchange take place in the economy? That depends. Because let's say there's another fisherman who's willing to give 2 fish for that one bowl of rice, then the farmer would be tempted to exchange his bowl of rice with the other fisherman who is giving him more fish. So, in this way, the demand and supply curves are defined in the economy. Where these curves intersect determines the market clearing price and quantity. However, we know that such barter exchanges have their problems, particularly the double coincidence of ones and the divisibility of exchanged items. To solve these problems, mankind introduced the concept of money. Money comes in between the transactions and solves the barter problems. It also allows specialization. So, someone who teaches can only just teach, and so on. Specialization increases goods and services produced, and money increases liquidity in the economy. Liquidity is how easily we can exchange goods and services in the economy. So, with increased liquidity, there will be increased exchange in the economy. With increased exchange, there will be increased profits and thereby increased living standards. Hence, a good monetary system is important for any economy to increase the standard of living of the people. It is because of the use of money that we enjoy many things in life, more than 90% of which we do not know how to make. And that's what profit actually measures. The more the profit, the better, so long the price is determined by market forces. In summary, profit comes from diverse knowledge and skills that we possess, that is, comparative advantages that exist in the economy, and through exchange that is facilitated by money, profit is made. Profit is not a zero-sum game, which means a profit to one is not a loss to another. Every balance sheet or income statement can show profit. So the prerequisite for profit is exchange. This we can see in this typical balance sheet. For example, let's say I produce watches. The moment I produce watches, I have added assets in the economy. However, that does not translate into profits. They will be merely inventories. Only when I exchange in the economy by selling them in the economy that they would become profit and shown in the retained earnings. But a fair profit requires market determined prices. Monopolistic or exploitative prices give unfair, exorbitant profits. To illustrate this, let me use this cartoon. This man is surviving a scorching desert with 2 bags of gold in his hand. At the edge of the desert, this man is selling lemonade, each lemonade for $1. But when he saw this man coming, crawling with his bags of gold, he changed the price of lemonade to 1 bag of gold. And in his thirst, this man might be tempted to exchange one lemonade for 1 bag of gold. This man would have made a huge profit, and that will be reflected by the huge utility gained by this man by consuming the first laminate. However, that price does not reflect the market determined price and may constitute unfairness. Hence, the higher the total profits, the better for the economy, since higher profits mean further increase in the standards of living of the people. Thank you. Bye.